Good evening. This is the Eye of the Storm podcast with the big picture, technical picture for gold and silver for Monday, May the 29th, 2023. Gold and silver continue to react more to the negative side, and I would connect that with the power that we're seeing in the dollar at the moment. So there are some other factors that are coming in, but again, I'm going to present a technical picture. So we're in an effort to kind of keep a cap or a lid on the amount of time that I'm going to be allowing for each update. So this is a technical picture in gold. I'm starting here on my monthly maximum chart. So it's been a while since I've actually backed all the way out to here. And you can see that we go back to 1980. We go back to when gold first made what I'm considering to be a cycle 3 high at 8. That high was 873 back in January of 1980. And from that time, we've gone down in a cycle 4, which took us to almost the turn of the millennium, and just before in 1999, when the market made a low at 253. And from that level, that would have been cycle wave 4. From that level, we launched higher in a cycle 5th wave, which would go much higher, and I'd have to even go to a different type of a chart because I can only go back to 1980 here. So, but we can start to measure out within this cycle 5th wave, what's going to be inside of it, 5 waves of primary degree of where we've already completed, in my estimation, primary waves 1 and 2, which puts us in the primary 3rd wave. Now, gold, unlike our equity markets and several of the other markets where Elliott can be applied, more so in commodities and in the precious metals, it isn't going to be the 3rd wave out of a 5-wave structure that most often is the longest and the strongest, but it reverts and it goes out to the 5th wave. So it would be the 5th wave that just will kind of grow and continue and extend. Not to say that the 3rd wave won't break into its own 5-wave structure as it does. And in my opinion, it could be likely that within that, the 3 of 3, so the intermediate 3rd of the primary 3rd, is subdividing as I would expect it to. So if we're coming on to that, overall, primary wave 3 has Fibonacci projections that show equality between primary 3 and primary 1 at 2,710. That's with that level. Then we start to go up from there, and let me just kind of pull this open. It should change all by itself, and it's not going to. And oh, there it goes in the opposite direction. So sorry. So that would be the equality. Wave 3 then would be 1.236 at 3,103, et cetera. You can see, but our next larger for primary wave 3 would logistically be 3739 or 3740, or 1.618. Technically, this is all technically. Mind you, again, the length of time that this is now taking place. We have cycle wave 3 completing in 1980, cycle wave 4 completing in basically 1999 or March of or just in 2000. So we have been underway within this cycle wave 5 for already 23 years. So, and we're still in the 3rd. So we have quite a bit more to go before we top out in a cycle 5. And as far as the commodities or precious metals go, I don't count beyond a cycle degree. So in fact, some would argue that really even doing so within the cycle degree could be problematic. And so, but we continue to follow. The Elliott continues to show that, yep, we should likely still continue to push higher. Fundamentally, different update, and that would be pushed out to the next fundamental update. So on the big picture, which right now is a 40 43-year picture that we're talking about, that, and basically within the last 23, that this whole wave pattern is building. And in fact, we could kind of go to from where primary 3 began. We're looking at December of 2015, I believe. Let me just go like this and go back here. And yes, we're talking September, October, November, and then 51, and here it was 45. So it's December of 2015 is where that primary wave 2 completed. And there we're in that primary third wave. So again, so that is 2015. So we've been in this one for 8 years. Taken a long time that we've kind of gotten up. But nope, and that's actually, we need to kind of go back out. Let's go to the weekly and then go back out to the monthly, and we can show it more properly. Puts it in place. So now bringing this down, let's go down to that weekly where we have here. And what we're seeing here is, again, we're inside minor wave 5 of the intermediate degree wave. I believe it's also a third wave. Excuse me for that. And I need to go back out to my weekly 20. So we have, yes, intermediate wave 3, and we're in minor wave 5 of intermediate wave 3. So again, bringing this back down to the daily, one more, to the daily chart. I am counting this. Wow. I want to do it properly, so give me a chance. I have to go back to that weekly chart. So we have minor wave 4. We're in the minor 5th wave to complete the intermediate 3rd wave. And within that, we've gone 1, 2, and likely another 1, 2. So minor wave 5, minute wave 3, possibly minuet wave 3, we're still inside, and that's where we are focused on right now. What can gold do? Within the big picture, I am looking for a continuation to the upside. First stop would be to break above 2085. If it does so, it's going to do it in a minute third, a minuet third, a minute third, and within that, a minor 5. So it could be a little bit of power, and I'd be looking for it to get above 2219 and actually upwards of 2335. And what I can put into that, this is to the downside. So what downside? And then I'm going to revert, and I'm going to show one other tag. We're looking for this wave 2 to complete. We have downside. We've reached the 1948. It dropped, and it dropped a little bit below $10, came back, took it, and now continues to trade above it. Still carries a possibility of dropping down to 1916 into that area, which would put this wave 2 at 0.618, which is totally within acceptable levels for a second wave. So that would take care of the minuet level. Also, that's come down to the weekly 20, and it's holding it. It can break below, but I imagine it would take it back right away. Now, what we also have going on, let me go out to this minute level, and we can put in additional fibs for where we think minute 3 is going to come in. And that is going to be that minute 3 would be equal to minute 1, and that is at 2168. And then above that, we have 2251, 2303, but then that 0.618 at 2380. That was where minute 3 may come in. So we have minuet 3 coming in 21 up towards here, and then a little bit higher, and then we have the minutes coming up even further. So we've got some movement. We've got some movement that can come into gold once things get going. But we need to see on the minuet level, we need to see that finish up, and then those will be, and we can put those in place in terms of the third wave. And moving averages, and this is on the weekly, but I'll drop down to the daily. We take a little bit cleaner look. So this actually seems like one or A, B, and then 1, 2, 3, 4. We've already maybe completed. I got an ABC or a 1, 2, and a 3. We got a couple of interpretations we can do here. I'm looking for an ABC. This could be it. And that's on the daily. If I come down now, bring it down to the 4-hour chart, open that up, and what does it look like? A little bit cleaner, right? A, B, 1, 2, 3, 4, 5, C. So here I got another clean down to that 1938. And I'm looking for it to move a little bit quicker, to come off of this a little bit cleaner. If indeed we're dropping from the finishing a 2 and dropping into a third, it should rally pretty quickly. But that's suggesting a lot about other things are going to go along with it. We already can tell that the gold right now doesn't play well with the higher dollar. And so we tend to see gold drop with a stronger dollar. And that would suggest that we still get that A and a B, but we just might count this a little bit differently, like 1, 2. You know, so we've got a couple interpretations down here, and that's on the 4-hour. I can drop it down to the 1-hour chart, and you can basically see there's that low. A, B, doesn't matter. We're getting an ABC up, and then it's going to be one more little leg down. So we're leaving open the potential. Big picture all the way down is suggesting that we still have a shot at reaching below 1938 to complete wave 2, to complete the ABC, and our next resistance, support is at 1916. Moving averages on the 4-hour are kind of rolling in the wrong direction and not being totally supportive of upside. The 200s are kind of starting to flatten out. Even the 50 is going to start to flatten out, which helps to provide a little bit of a boost that it'll be complete and we'll start moving higher again. Over in, let me take this back out to our monthly chart. Next thing, we're going to take a look at silver. Silver is well involved in a pullback still, but also similar to gold, reached the peak at $50 approximately. Let me get that up. $50.50 back in January of 1980. And from that level, we've gone down in a cycle 4th wave, but we started in that cycle 5th wave here. Now, again, primary, so we're looking for cycle wave 5. It's going to consist of 5 waves of primary degree. So far, this high was in 2011, and it was at, I can get that right away. Let me just go like this and go right there. 49.82. Didn't quite get to that 50 level or break it. So therefore, it's being concluded that it's wave 1. And if that's the case, we've still got this wave 2 going on. And I'm going to bring it back down, and because I know I got some stuff filled in. So if we go back out to that monthly, now we got it back filled in. So we got 1, we have the 2, we're inside of a primary 3rd wave going up. And here I have the 3rd waves. So primary wave 3 would be equal to primary wave 1 at 57.96, we'll call it. With the next above that at 69. So we have a little bit of a zone. It gets above 1, which we're looking for. It would still put pretty small. But, and again, the rally, we can't expect in this much space. So yes, it's going to have a nice rally, but it's going to build like it does all the ways. So outside of that, 57 or 58, our next level up is $85, $86 an ounce, a troy ounce. Then we're clearing this 3rd wave, and we could be into territory. But again, it's going to be depending on wave 1 being the extended wave, wave 3 coming in just equal to it or slightly above it, and wave 5 maybe also extending. So longer term, we have potential. I mean, these are the technical numbers that go along with the move if we're measuring out this first leg down to the bottom of the second leg into what the third lay would look like. So Fibonacci-wise, technically these numbers that's what it's telling us. Now, these numbers go back to 1975. So this has been in progress nearly 50 years, top to bottom, where that reached that low in 1991. So this has been in progress for 32 years in building in a cycle fifth wave. So now you're going to get an idea of how long it could take before the market would see any of these levels. So now let me bring it down. So if you wanted to say that, well, I think I should hold silver, you're going to put it in the correct time frame in terms of how long am I going to have to hold this before I can see levels like that? Well, if it took 23 years to get to this point from that previous low, well, it could take another 10, another 15. And there has to be other factors that are going to go in. And again, that's on the fundamental discussion to be included in a different update. Technically, where we are right now. So let me just review quickly, going back to just the weekly. There's intermediate one, intermediate wave two. We're inside an intermediate third wave, of which we had minor one, minor two, minuet one, and we're still in minuet two. But we have that 618 number down at 2424. So I believe that, no, actually it's 2257, 2260, excuse me. That has the potential where it could come down into that level. Previous wave two bottomed at 1998-ish, 1994. So wave one, not in any threat anywhere down in there, and certainly can drop to 2257-ish and hold above the 200s or at 2186. And we're at 2198, or actually almost 22, but that fib comes in at 2186. And again, that's that sweet spot, as the old SPX market makers would call it. So those levels remain in the picture for right now. So in terms of a long term, I'm looking for it to bottom, and then the rally should begin in earnest. If it's a 3, right? So it's a minor 3 of a minor 3 of an intermediate 3, it definitively is the 3 of the 3 of the 3. It should contain strong power to get this thing above likely $30. And what I can put in on the weekly chart, we can put in for minor wave 2, what we think we can get up to. 100% is 2732, right? So they're both kind of coming in at the same levels here. But here is, our levels. So 50, 50, 50, 50, 50, 50. There's the first 100%, right, for this minute. So this 100% is for the minor third at 27, but we'd be looking for it to kind of come in a little bit more powerful because we have this guy. Still hasn't bottomed, so we don't know quite, but I'm going to imagine that's going to take us maybe up to here. So the minor 3 may be up to towards 31 and 7/8 to 32. I would consider, again, this is a weekly Fibonacci setup. So if we're looking at August of 2022 up to January of 2023, that's September, October, November, December, January, there was a 5-month rally. If we're into a 5-month rally here, and this began in May, we got June, July, August, September, October. So we might not reach these levels until October, if this rally is going to continue, if this count is valid. And right now I'm feeling that it is valid. So same game plan here, that if you're investing in silver and you're thinking, well, I'd like to buy silver now and hold on to that level, here's 2 things you need to consider. It's a big contract, but even if you were just to put silver aside, so you went up and bought pure silver bars, and they come in various weight and cost, and you held the bar, you're gonna, again, there's going to be a markup because you have a dealer cost in here. And so right now we're trading at 23.30 in that area, and there'll be a markup, and you'll be looking for it to get to here eventually. But if you're trading in the future, or if you're trading in the SLV, you have to consider that it is going to react to the market, what the market does. We have potential to go to 22.57, as I described before. We have potential to go down to 22 and down into here. If the account is wrong, then you have to also determine where you're going to place your stop. Use good risk management. Account accordingly to the size of your account. So therefore, buying, to me, I look at this like buying the physical, right? You're making an investment in something, the physical silver, so, but it has to be, making sure it's clean and pure and not just silver jewelry. So again, you're investing for the long term. If you're trading the future, you might be wanting to look at what the potential is. It's a big contract. It is a big contract, and each tick is quite a bit of money. So again, you have to have the account size to do it. But if you do and you're trading it, you can look at it as a B, and we're coming off on either we've done that C wave, again in that first wave coming off, or we have to leave open the possibility that we turn lower and we break back down, break back below the 200 and start reaching for 22.57 down to 21.86. We got the 200s in there. We got a little bit of support. We've got some areas where it should support itself and launch. Again, a pure sign is that the market starts doing this, but to the upside. Nice, strong upside bars. That was not bad. That was a good start. If we get another bullish engulfing out of that, it's going to add to the likelihood that silver has turned the corner. Put a wave 2. I'm looking at the third wave. And that's going to be it for the gold and silver technical picture.